Welcome, everyone. Thank you for taking the time to come here today. We really appreciate it. What we'll do is I'll just give you a quick overview of the company and the history, and then we'll go into reviewing some of last year's results. Our customers are what we call concrete contractors. And a concrete contractor is very similar to a plumber or electrician. It's a specialty business. All he does is put down concrete floors in what we call slab on grade, which is on the ground. That's his whole business. And he's a very small business, maybe 20 to 40 employees. And Dave Somero, who's the inventor of this equipment, was a concrete contractor. When one of his customers said to him, "You've put this floor down in my building and you did it by hand, and the floor isn't very level, so I can only put my racking up 10 or 15 feet before it's so crooked that you can't get the forklift truck in there to pick the pallets." Now, if you could build a flatter floor, I could take this same land space in this same building and just raise the roof twice the height, and I could do twice the business through this warehouse. So Dave Somero said, I don't know what he did say, honestly, but I'm guessing he went back and he gave it a whole lot of thought. And years later, after doing some prototyping, he came out with the Somero laser screed, the largest piece of equipment we have in the line. And that was the beginning of the whole process. So Dave went along, and in the late 90s, 1997, he had some health issues, and he brought us in to sell the business for him. And in the process of going through the sales, we ended up being purchased by a company called Dover, which was a large U.S. conglomerate, New York Stock Exchange conglomerate. We were one of 52 freestanding companies. We were with them for 5 years. They then decided that they were going to divest themselves of all the companies under 100 million. So there were 32 of us that were divested by Dover, and a private equity firm by the name of Gores out of Los Angeles, California, purchased us. And they called a year later and said, "You're going public in 4 months on the AIM." And we said, "Okay, what is it and where is it?" And that started our journey over here. So now you know how a group of Americans ended up over here, which is the most common question asked and unasked by virtually everybody. I have to tell you, the first thought of it, it was kind of one of those things like, oh my God, how do you do this? And we had all kinds of things we had to do. And it's been the best thing that could ever happen to this company. This is not an easy business to understand as we sit down and explain it to you. And one of the real difficulties everybody has is you can't compare it to anything. We are in a unique niche with a dominant product with virtually no competition. And so it's hard to compare us to anything. So we all struggle with, what are we really? And we understand that. But we were really impressed when we went through the IPO in the number of people that really understood it and the large number of shareholders we got holding significant portions of it. So it's a pleasure to be here. Thank you for taking an interest in it. I just want to tell you a little bit about the customer because it's a really important part of why this business has some really strong moats around it. This small customer of ours goes out to buy a large piece of equipment from Howard, and he'll give him a break and sell it to him for $450,000. For a lot of people, that piece of equipment costs more than the house they live in. And that's the only, if you're doing it by hand and you switch to a large line machine, that machine is what makes your income. There's nothing else. You don't do anything else. So picture yourself having made that decision. You went home to your wife and said, "Honey, I just want to let you know Howard's a great guy. I met him, and I gave him $450,000 that I borrowed from the bank to get a laser screed. And she says, you know, we got 2 kids and one on the way, and we got a 2-bedroom house. What did you buy a laser screed for? He's scared to death that he's going to make a mistake. And think of him. If he makes a mistake, there's a lot of friends, neighbors that aren't going to be very happy with him. And all of us would be in that same boat. So we do have a few competitors. And if you guys have looked it up, you've seen it. We had the first competitor in 1989. What the competitors are machine builders. And they look at this equipment and they say, I can build one of those and I can sell them for a little bit less. So they teach you how to run this machine. You know, anybody can learn how to drive it. But if you're that guy that spent $450,000, you're not happy just learning how to drive it. You have to figure out how to take this piece of equipment, go out and bid on jobs, and go on the job site and put down a concrete slab. And if something goes wrong in the process of doing that, that slab starts to cure in an hour. So if you can't get the machine to work, you've got to pull the machine off the job. And the main contractor that hired you is going to be really upset with you and tell you that he's not going to think about hiring you again till you get a machine that's more reliable. So what does this guy do? Well, when we sell you this machine, we give you free training. We spend a little bit of time teaching you how to drive it or operate it and set up the lasers. Spend a lot of time talking about the things that can go wrong in the hectic pace of putting down a concrete floor. And what we tell you is if you can't figure it out in the first 10 minutes there's something wrong, call us on the telephone. A lot of these jobs are done at 2, 3, 4 o'clock in the morning. If you call a competitor, you get the answering service saying we'll be in at 8 o'clock, we'll call you back. We have a phone service that we guarantee you 24/7 that we will have a certified technician on the phone in 10 minutes. And we have a translation system built into this phone service so we can talk to you in 65 different languages. This is only the beginning of the support we give you when you buy this machine. We give you a tremendous amount of consulting support with the different types of slabs you're putting down. How do you go about starting the pour? How do you go about ending the pour? So it's our ability to provide you the comfort and the services that are going to help you be highly successful in life. And that's the real important part about this business. Yeah, we got 63 patents, and those are wonderful things to have. And they always help you out. But you as the customer that bought it don't care how many patents we got. What you want to know is, what are we going to do to make you successful? The last thing to remember about us is we're only in the laser screed business. If our customers aren't successful, we're not going to be successful. And so that's kind of who we are. Let me just start out by saying, before I turn it over to Howard and John, last year was a fantastic year. We had put out a 5-year forecast that said we would do $90 million. We ended last year at $94 million. Our financial matrix are all very, very strong. We've come out with a new market segment that's completely different from the one we're operating in, but it still has to do with screeding concrete in structural high-rise buildings. It's a significant future opportunity for us. We made an acquisition, which John will tell you about, and we're also going to put on a significant expansion to our plant, which is in Houghton, Michigan in the United States, to be able to handle the new product line. So with that, let me turn it over to Howard. He'll run you through the different regions of the world.
Great. As Jack mentioned, all of our products are about quality, and we have product in over 93 countries, and it doesn't matter if you're here in the UK, in the US, India, or anywhere in Europe, quality is key to our customer success, and of course, our equipment provides that quality. So let's take a look at what last year looked like. As Jack mentioned, we reached $94 million in sales, which was huge. 10% of that was above 2017 results. Another nice data point is 21% of that revenue came from new customers. That is huge for us. So if you take a look at, we sold a machine today, but we're going to get growth down the road because that customer is going to come back and say, look, I need another machine or I need a bigger machine. So this is great to be able to mention new customer growth because that's where how we're going to grow the organization. So looking at North America, one of the biggest drivers of our sales, $64.7 million compared to 6.9 over 2017. E-commerce construction, such as the Amazon, provided a big bump to our overall growth last year. And keep in mind, when a big box retailer, e-commerce, builds a warehouse, there's a lot of other warehouses that goes alongside of that to support that. So we've seen great growth there last year. 2019, that's expected to grow as well. If you take a look at the new products growth, 29% of our products went to new customers. And if you break it down a little bit further into the categories, we have boomed category and ride-on. The boomed is our largest machines, stemming from $450,000 down to $150,000. The ride-on category, $150,000 down to about $80,000. So in the boom category, we're 17% growth from a product standpoint. In the ride-on category, that 42%. Europe, we closed the year out at $13.5 million, $300,000 over 2017. We had 18 countries contribute to our overall revenue growth last year. 7 countries came on board compared to 2017. Give you a couple data points. The UK ended at $3.4 million, Germany at $1.6, France at $900,000, and Portugal about $700,000. So taking a look at product growth, we had 35% product growth, new customers coming on board in Europe. Boom category 19, and our ride-on 45%. So you can see we had some good opportunity last year. China, we had a good year ending at $5.3 million, slightly down by $200,000 over 2017. $200,000 is one machine. And there's a lot of timing that comes into play when customers buy machines or when they wait until that next project starts. Middle East, we had a stellar year at $2.4 million, which was $300,000 ahead of 17. Our boom screed sales category grew $1.2 million. And the S10A, which is the smallest machine in that lineup, played a major part in our sales last year. And that's, again, having the right product in the right market segment at the right price point. Latin America ended at $1.7 million, great results. Latin America had a good year considering all the political unrest and uncertainty and unfavorable change rates. But we did increase sales in Argentina and Mexico by $200,000 over 2017. And there's a lot of good opportunity in Mexico this year, Argentina, Panama, and Colombia. So we continue to stay focused there. The rest of the world was up by 36%. India, we had our first year at $1 million, just a little bit north of $1 million. And we always say the first $1 million is the hardest to make. So we ended at $1.1 million. India was up $330,000 or 44% over 2017. And we have, to give you an idea who we have on the ground in India, we have 5 people on the ground in India. We have 3 sales and 2 support. We'll continue to grow that as we see the market starts to move. One thing nice about India, they are quality driven. And 62% of our sales went to net new customers. Parts sales in India grew by $142,000 compared to 17, and that tells me that my install base is utilizing the equipment, so they're buying consumables. Australia had a great year at $4.4 million, 1.7 above 2017 results. Boom screed sales, the S10A and the 15R, generated about an additional $900,000 over 2017. Looking at it by product, next page, boom screed sales grew $3.3 million or 9% over 17. North America had a major part of our sales in this category. Overall, we had 132 boom machines sold. North America pushed 81 out the door. Europe had 21, Middle East had 10, and Pacific had 9 units. Ride-on screed sales grew by $4.3 million or 23%. In total, we moved 234 units compared to 189 in 2017. Revenue for the 940, this is the biggest in the ride-on category, $150,000, generated $14.4 million compared to $12.8 in 2017. Biggest product growth was the S485, which resulted in a $2.7 million increase over 2017. North America was 67% in this category, and Europe had 15% of the volume. SP16 sales, this is the hose puller system, which John will talk about, the acquisition of the Line Dragon. We had $1.6 million in sales. This is really our first full year, full run of focus. 54 units sold compared to 24 in 2017, and we had 32% of this product going to new customers. So this is a customer that doesn't own a laser screed. So again, this gives us some opportunity to grow this market segment. And with that, I'll turn it over to John for some financials.
Thanks, Howard. So as Howard walked through the top line, which we had really nice balanced growth across product lines and regions at 10%. Importantly, that translated really well into increased profits. Our adjusted EBITDA grew 10% to $30.8 million, just a shade under $31 million. That represents a EBITDA conversion rate of 33%, which is in line with our overall adjusted EBITDA margin for the company. Profits before tax also grew nicely, up 13% year over year to $29.1 million. And adjusted net income, diluted adjusted net income per share were both up over 20%. So overall, the profitability growth was very strong. But most importantly, cash flow from operations grew 19% year over year to $23.8 million. We had effective working capital management coupled with the strong earnings growth really drove the operating cash flow. And even with paying over $12 million in dividends in 2018, we still ended the year at over $28 million in net cash, which is 48% growth over the prior year. And that strong net cash position funds and actually determines the strong dividend payments that will be occurring in April of this year. Our final ordinary dividend per share will be 13.5 cents. So that brings it to a 19 cents full year dividend, which is 23% up over the prior year, as well as a supplemental dividend of $6.6 million or 11.7 cents per share, which will be paid at the same time. So really strong distribution of cash to shareholders, which we're pleased with. And taking a little bit deeper dive on slide 7, operating results, a couple of points to highlight. Gross margins remained flat at 57%. We had price increases and productivity gains, which were used to offset some of the increased material costs related to surcharges and tariffs. And with that, we continue to have that expectation that we'll be able to offset any cost increases that we expect to see through surcharges and tariffs that would be handled through price increases. And then on operating expenses, we did show a net growth of $2.1 million, so a net $2.1 million investment in SG&A, which was driven primarily by adding positions. We added 13 positions in 2018 versus 17 to support the growth. And that's in line with our target, which is to add about $2 to $2.5 million per year in net SG&A to support growth of the business. And particularly as we're in this transition phase to attack a new market segment with the sky screed and the structural high-rise market, we expect to be adding positions that will help us support that growth. In this case, the costs kind of lead the revenues that will come from that opportunity. On the tax rate did improve year over year. We were a shade under 26% effective rate. Our target is really kind of a 23 to 24% effective tax rate based on the U.S. statutory rate of 21% and about 2 to 3% of state and foreign taxes. So that gets you to the 23 to 24% range. We were a little bit higher this year as we had some slightly higher state taxes and some cleanup related to some other tax issues that flowed through the provision. But on a go-forward basis, we'd expect to see kind of more the normal level. Jumping to the next slide, on slide 8, financial position. As mentioned before, the cash position was quite strong at $28 million. We had really sound working capital management. A couple of moving parts there. We did see improvement in accounts receivable. That was really just driven by steady collections through the year, really focused effort on managing accounts receivable. We did have some uplift in inventory, which was driven by new products, increased sales volume, and a higher level of trade-in equipment in 2018. But on balance, we expect to see, modest required working capital investments on a go-forward basis to support the company and remain really focused on managing the working capital levels at or about where they are today. On slide 9, on the cash flow statement, we talked really, it's actually a very simple story. We talked about the cash flow from operations being very strong and really driving and funding the business. We had a low level of CapEx for the year, closer to our run rate, which is generally about $1 million a year. We didn't have any construction projects, but as Jack mentioned earlier, we do have a couple of CapEx projects coming up in 2019. We are expanding our Houghton facility. It's about a 40% increase to the footprint in Houghton, Michigan. It's 35,000 square feet. The need to do this is really driven by new products. With the SkyScreed, which is a different form factor than our other products, we need a different configuration in our assembly operations, as well as growth of the business from our core business. We need the space to kind of get us to through the next phase of growth of the company, which we think gets us to kind of $125 million capacity for the business. So that project will take place in 2019. It's $3.5 million. And we also have a small add-on to our training area in Fort Myers, which will be a project a little bit less than $500,000 in cost, likely second half of 2019. And that's really to accommodate the increased throughput of traffic through our facility of training and different product demos that we do and different events. As a data point, we had over 1,000 hotel rooms in the Fort Myers area for people who have come through our facility. So we've seen a tremendous amount of traffic, which is really good for us to develop the skilled labor in the industry, but also promote our products and develop our brand. On slide 10, just a quick snapshot on the dividends. This is just a graphical depiction of our dividend policy, which remains unchanged. It's a 50% fixed payout ratio of adjusted net income, which this year for 2018 represented a $10.7 million distribution, or 19 cents per share. The final payment is going to occur in April, as well as the supplemental dividend policy, which is to distribute 50% of the excess net cash over $15 million as a supplemental dividend. In this case, it represents a $6.6 million distribution, or 11.7 cents per share, paid at the same time as the final ordinary. And on the dividend, one last comment, just our philosophy on the dividend mechanism, we really are intending to solve for three things. We want to maintain a conservative balance sheet, understanding we're a cyclical company, and that's a really sensible approach, we think, to manage through any economic conditions. We want to be disciplined in terms of our return of cash to shareholders in a predictable way that people can forecast and understand, that's kind of systemic, as well as give us flexibility to make investments back into the business when we see fit. Obviously, our first order of business is to find ways to deploy cash for use for the business, because we think that generates the highest return on investment. And as Jack mentioned earlier, one of those examples which presented itself in early 2019 was the acquisition of the Line Dragon business, which is a complementary business to our SP16 concrete hose pulling equipment. The Line Dragon business was an asset acquisition, so we acquired patents, we acquired the trade relationships, the inventory, the brand. And with that acquisition, we're able to take the SP16 design and the Line Dragon design and come up with the best of both design, next-gen version, which we think will be adding value to our customers. It's also acquiring a competitor in a very sort of small niche market, but gives us some really good opportunity for additional growth to cross-sell into that customer relationship base, but also grow that product line domestically and internationally. And the Line Dragon business was a little bit less than $2 million in revenue in 2018. So we think it's a nice little bolt-on acquisition. We're not an M&A type of business, but when those opportunities do present themselves, we think it's a good use of cash. So.
All right, with that, taking a look at the trading outlook, whenever we sit down and try and understand what the future holds, one of the great benefits we have is that we have a direct sales force and direct customer support in all 90-plus countries that we work in. Howard and his team talk to 350 customers a week. And one of the things that we can do with them is talk to them about how their business is going. If you're a contractor, you're doing a lot of bidding. And you're out there bidding on jobs, so you know that the volume of jobs that you're bidding on is going up or down. And that gives you a glimpse into the overall conditions that are there. You also know by the margin that you bid your business with how busy it is out there. In some cases, you'll bid at a margin that you find acceptable, and assuming you get some of that, some of the other ones you can bid higher. Because if you get them, it's nice to have them, and maybe you drop something else out, but it gives you a sense of the marketplace. And normally, probably going back 5 years ago, 4 or 5 years ago, our customers would have had 3 to 6 months of solid visibility. They had had conversations with the main contractors on the bids they put in, and they were pretty sure what they were going to get. For the last couple of years, that visibility has increased to a year. And this year is no different. We contact our customers daily, but we see them at the World of Concrete. We also have the Bauma show coming up in Munich, Germany in 3 weeks. That's the largest trade show in the world. And at the World of Concrete, every one of our customers was just incredibly excited about the volume of business that they already had on the books for this year, and a number of them had it into next year. And this is a real strong indicator for us about what kind of year we're going to have. And that's true of all regions. At the World of Concrete, 35% of the attendees are from outside the United States. So we're seeing from people all over the world. And I can tell you, everybody in every one of the regions we've got is extremely positive about what's going on this year. And so to us, that's a great feeling. And it's consistent with the reads we've always had from our customers. So with that, we'd love to take your questions.
First of all, thank you very much for the presentation. I just have a question really around countries like France, and I'm only using that as an example, but it's $900,000 or 1.1 million in India or whatever. I mean, these are huge economies, and I can't believe that these people only need 3 machines a year.
Well, so if you look at Europe alone, I think is your question. You came out of this recession about 3 years after we did. So you're lagging behind us in terms of growth. But if we look back to our previous peaks, which were 15 and 16 million, 7 years ago, when you add on some pricing, Europe should be somewhere up in the low 20 million range. So we're still looking for significant growth here. So you're right. Today, if it were to stop here, that would raise a question. But historically, when you look back to the last recession, we were dealing in virtually all of the European countries. And typically, you got to somewhere around a third of what the U.S. ended up with.
And we have more products today than we did back then when the downturn happened.
So can I just ask one more question? You said that the capacity that you're investing in is going to go to about $125 million. I mean, that's 2 years worth of 13% growth, and you're butting up against the capacity again. So would you not want to be slightly more expansive?
Well, it's a balancing act of, we want to make investments that cover us for a number of years. We're not looking to, we have flexibility to add on to our facility. So it's actually not that cost prohibitive to do a second add-on. So, as opposed to spending, $8-9 million today, we prefer to do it in increments. And part of it too is the uncertainty with what the business looks like. That was one of the reasons that I think if you remember, we had a comment about a year ago saying we were looking to do an expansion in Fort Myers of about $1.5 million because we had growth of the business. But we hit pause on that because we weren't quite sure what that growth looked like. As we start to get into new market segments, we can't fully envision what the new products are going to look like today.
Okay, so there's plenty of, after 2 years, you can still expand further.
Absolutely.
Okay.
Absolutely.
So we're just doing it in a measured way. Yeah.
Oh, hi. Could you give a bit more color on the high-rise leveling market in terms of what's the sort of market potential? And also, could you talk a little bit about the customer dynamics in terms of the customer decision he's got to make in terms of what are the economies and the attractiveness of taking on this new machine vis-a-vis whatever they're doing at the moment, and how that compares, for example, to your ground leveling machine?
Well, in the high-rise market, the structural high-rise market, everything in that market right now is being screeded by hand. So it's similar to the lasers, to the slab-on-grade market when we started in the 1980s. So that part, but it's a completely different customer base. The people that do high-rise buildings do not do slab-on-grade. They've got plenty to keep them busy there. So it's a whole new customer base. It is similar to us when we started out in that it's a disruptive technology, because you're going to a concrete contractor who's not familiar with laser screeding, and you've got to change the way you use your crews, the number of crew members you have. And there's also a lot of other players involved when you get to a high-rise building. The plumbers and the electricians are putting up stub hubs that come up through the floors to run all of their cables and conduit and all the plumbing. So they have to change the way they're doing things before the floor is put in place. Because if they just leave something sticking up, we're not able to screed the concrete. So we have to work with different trades to get everybody on the same page when we're going to start laser screeding the floors. So this is going to take time to change habits and to get everybody on the same page. The other thing you know for sure is, even though it's structural high-rise buildings, they're going to be done different ways. And there's going to be a lot of different ones done in a different manner. So maybe this sky screed that's on page 12 works for some of our customers, new customers, but doesn't work for all of them. They'll want ones that are longer. They'll want ones that work in a different way. So that's going to give us opportunities to make other new products that will allow us greater penetration into this one marketplace. When we started out in 1986, we had one machine for the slab-on-grade market. Now we have 13. I would imagine down the road, you're going to see the same thing happen in the high-rise market. There's going to be new products coming through the pipeline.
In terms of the market potential, I mean, do you have a view on that?
The market potential is there's not some great statistics to measure it. One of the ways we can do that is look at the total amount of construction cost. And if you look at the total amount of construction costs on slab and grade buildings, we looked at it in the United States, and on high-rise buildings, it's very similar. So from a construction standpoint, it's a very, very big market. Now, what our penetration is going to get to is an unknown at this point, but we're optimistic that it's going to be really good.
This is a global product. It's not just for the U.S. or for Europe. This is global. What we're doing this first year is keeping it close to breast, keep it in North America so we can learn the things that Jack mentioned about making sure that we understand all the trades and everything else before we go outside the U.S. So this year, we'll just focus on the U.S. 100%.
Good afternoon. Thanks very much. Three questions, if I may. First of all, the consultancy service that you mentioned, is that a free service or do you charge for that?
No, all the consultancy we give you in teaching you how to do it is built into the price. Now, after you've bought the machine and we've trained you, if you say, fly out to my location, I want you to spend a couple of days with me on this particular job we're going to do and help us make sure, there's an extra fee for that. But the phone calls are all for free.
Thank you. Second question, do you feel that the tax cut in the US at the start of 2018 had a significant effect on construction capex overall? And if so, do you feel that the impact of that is likely to be transitory or ongoing?
So it's hard to say that it had a very specific, identifiable impact. I think what it did was it just promoted a broader positive economic condition, which is what we currently experience, which is again a very positive market climate in terms of construction activity, in terms of just general business. The U.S. remains very, very robust.
Thank you. And then finally, do you use distributors or resellers in any of the territories you operate in?
Not really. I mean, we do have one that covers Australia and Southeast Asia for us, and he's more what we think of as an agent. He specializes in that area. He has tremendous knowledge about putting down concrete floors. But generally, we want to do everything direct, and that gives us that customer contact that gives us what's going on in the marketplace and gives us the new products. You're welcome. Thanks for the questions. Yes.
To pick up on this, one of the first questions about competition, he was saying in India, France, doesn't matter, you can take any market. You've got a very, very small market share. And yes, at the outset, you said that, you have no real competition. There are lots of tall buildings, with stacking pallets. So there must be somebody out in Europe, India, that you're competing against.
If you Google things, you'll see there's probably, I think in Europe here, there's 3 or 4 guys that have been around for 10, 15 years. There's some in China. There's one in the United States. So the competition has been there. The first one came out of Holland in 1989. So they've been around forever. The thing they haven't been able to do to give them good fitting is that they're machine builders. So they build a machine, they put it in their catalog, and they say, if you need one, come buy it, and I'll sell it to you. And you go down there, and you want to get one? And he says, sure, here's how you turn it on, and here's how you drive it forward. Any other questions? Well, he hasn't showed you anything about how to build a concrete floor. And that's what our customers find, is that they need us to help them make this machine make money for them. And so there are people out there. But the small volume that you're referring to, like in India, it's still being done by hand. We're going in all of those territories, and when we increase our business, it's because somebody has been changed from doing it manually to doing it with a piece of equipment.
And the second question, in London, for instance, we have a lot of very tall buildings, lots of new buildings being constructed by big companies like Mace. So, that's not a small band of concrete floor layers. Are you selling into the likes of Mace?
Well, if they're in the high-rise buildings, we're not familiar with Europe yet. But if it's similar to what we've run into in the United States, that there is a concrete contractor that is a subcontractor of the main contractor that's doing all the concrete in that building. So that would be our customer. It wouldn't be the main contractor. It would be the subcontractor.
Going back to the SkyScreed, I know you introduced it in January at
Yes.
the World of Concrete. Do you actually have any in operation or made sales as yet?
We got a list of opportunity in front of us, and as Jack and I mentioned, this is just, you just don't sell it and you give it to the customer and away it goes. So there's a lot of involvement that has to be done prior. So the customers that showed a lot of interest at the World of Concrete, we got them in the queue, and we're going out, sitting at the job site with the superintendent, the electrician, the plumber, to make sure everyone's on the same page. So when we bring the machine to close the deal, everyone knows exactly what they need to do. And we're just really waiting for the weather to break so we can get rolling. And we're about a month into it right now. So we got the sales team rolling, understanding how to sell it, how to identify an opportunity, all those types of things. So that's why we're keeping it very close. And we're also just ear tagging about $1 million in sales for the first year, because we're just learning a lot as we go here. So a lot of good opportunity in front of us.
Okay, and the other question, you talked about costs leading sales, particularly in relation to the SkyScreed and an additional capex. Is that going to result in a reduction in margins over the next year?
No, it just puts a little bit of upward pressure on the incremental spend. So if you look at us historically, the SG&A targets have been kind of, incremental spend on SG&A has been kind of $1.5 million to $2 million. We're now kind of going more like 2 to maybe 2.5, which is mostly adding some personnel to start to develop this market segment. It won't be dilutive to our margins, but basically what it does mean is that the margin should be, as opposed to what you've seen in the last three to 5 years of the margin growth on EBITDA and gross margin, it's more sustainable at the current levels.
Good afternoon. Thank you for your presentation. I was looking through some of your historic numbers and specifically regions outside the US. And I compared China and LATAM to 2014. And I could see that China's sales are down 45% in this current year versus 2014. What is the problem in China and LATAM?
Yeah. Well, one of the things we've identified in China, we've been in China since 2007. And we were the first ones there. We pioneered the market. But what we learned early on, or a little bit later on, was there was two pieces of the China market, was the quality end of the piece and the productivity side. The quality end is the things that we've been talking about where our machines really fit. The market wasn't there yet. Standards and specifications weren't really written, they weren't enforced or anything. And there was a slowdown period because of the market caught up to the expectations of the standards that were not in place. So we've identified, okay, the two different market segments. So what do we do? So we went from the top down, talking to the architect and engineers to drive specifications and really teach and educate them why you want a flat floor. We went to the ProLogis, which is the building developers, and explained to them why you need and want a flat floor. One of the things we did last year, I did personally last year, is went to China, spent time with the end users, and these are the guys that are leasing the buildings out. They were responsible for putting the racking in the building, like Jack mentioned earlier, that puts all the product on the racks. They're responsible for basically everything. Well, what we learned was, after sitting down with 30 of these tenants, that they spend a lot of money on grinding and patching the floor and shimming the racks and everything else. So I took all that information, went to the largest developers, GLP and ProLogis, and said, hey, do you think you're providing a good quality floor for your tenants? And they said, absolutely, we are. I said, oh, really? Because this is what we heard. No, I didn't tell them what tenants we went to talk to, but they said, look, there's a huge cost to them that I think there's obviously a big disconnect, but an opportunity for you as a developer to actually give them a flat floor, charge a little bit more in rent, and it's a win-win for everyone. So these are the things we have identified last year. Another thing that we looked at was the product lineup. What's the right product lineup? When we first went there, we said, okay, we have all these products in the US and we're going to sell every single one of them in China. And we did a pretty good job at it. But what we've done is identified what is the right product for the market, focusing on the productivity side and also the quality side. The quality side is the boom machines. That's the quality side of the market. Productivity side is the smaller machines, which, as Jack mentioned, we got some competitors there. That's where they play. So we put all that together. We have a in-country vice president of sales. We brought him on board in July, and he came from the capital equipment market. So we're really trying to understand and reset this whole thing. But there is a lot of opportunity for growth. Case in point, we had twice a year we have China delegate come over to the UK to understand how to get a flat floor. And it's a lot of times it's the developers and our customer trying to understand the process. Well, we had a gentleman over, a family member of one of the largest retail markets in China, over 1,000 stores, 70 billion RMB last year. And we said, well, why are you here? And he says, real simple, I can't get a flat floor. I can't wait for the national standard to get in place. I got to figure out how to do this myself. So we're going to buy the land, put the building up, and do the floors just because I can't get it. So we know with that we are making a headway in the quality drive. Albeit, we ended up at 5.3 million, a little bit down from 2017, but we are making headway. We always said from day one, this is a long-term play. It's not a drag on the organization whatsoever. All of our people on the ground are Chinese national. We have a total of 15. We have sales, support, management, and then of course we have our warehouse, our concrete college, because we have to teach and educate, as Jack and I talked about, how to do a good floor. So we are making headway in China. It doesn't really reflect in the numbers.
Clearly, America still dominates, really. I mean, you look at the growth in America you've had over the last year, it's about 4 times greater than the rest of the world put together. How much can we sort of get a feel for what's going on in America? I mean, you've got a world of concrete. We don't, unfortunately, but, is there a health index we could monitor from over here that'll give us a feel for how things are going? Is there anything, we call it the crane count and the skip count here. What can we get a feel for over there?
We've looked for years because it was something that we would have liked to have known. There used to be an index that was very good until the last recession, and it's an index that's put out by the Architects Association, and it measures the amount of hours that architects are working. And that was a good trend, and it mirrored the housing starts that went there. But in the last recession, first of all, it was put out by the Architects Association, and they surveyed their members. So you had to join the Architects Association to give them the input. In the last recession, nobody's quite sure what happened, but it appears that a lot of the large construction companies started to bring some of the architectural work in-house, and they weren't members of the Architects Association. So this index kind of fell out of relativity, and a lot of the economists dropped it. So what we really have now, other than our customer feedback, the biggest thing is the number of new homes being built. And that because the commercial part of the business is going to follow, in general, the homes. You've got the new upstarts like Amazon that don't have anything to do with the number of homes started. But in general, if they go out and build a large section of new homes, they're going to have to put all the commercial around it to support it, and then you're going to have a warehouse to support the commercial. And right now, we're just a little bit more than 50% in terms of new home sales, equivalent to the peak in 2005. So that tells all of us, if that measurement remains true, that there's still a long way to go. It's really, so you can imagine it's hard for us to forecast long term. All of our confidence comes from what our customers are doing and their short term. Because when they go to live through a recession, they're going to be putting money back in the business. And therefore, they're very sensitive to, what's going on in the marketplace. And they're telling us that things are wonderful.
And because I'm a little wary of the fact that you obviously do have to, when you move into other countries, have to do all the extra consultancy, shall we say, and looking after your clients. How are the margins when you break them down into all the different regions?
They're the same.
Exactly the same.
Yeah, the only difference you ever see, the difference in our margins in general just comes from product mix. So the remanufactured machines are roughly 25% gross margin compared to the rest of our equipment. So, if mix shifts, there might be some regional shifts in terms of mix or take rates, but overall, the sort of, if you normalize for that, it's very similar margins across regions.
Thank you again for your presentation. A supplemental on the sky screening, I'm afraid. I can understand how laser screening works at the warehouse type level. The old things tip over if they don't get it flat. What's the benefit to the construction of high-rise of having a flat floor? Most of these floors are carpeted or whatever, and desks don't tend to tip over if it's just a little bit out.
Well, the carpeting, you can put carpeting on anything, but it really comes out to the build out. So when you put the walls up, you put the glazing, the windows on the floor. If your floor's not level, they're going to be cutting everything to make it fit. That's very, very costly. Then, in addition to that, if you put your tables and your chairs and everything, if you got humps and bumps and dips, it doesn't work. And that's what we talk about remediation work. So when we started off doing the development, understanding this market, because we knew that this was a market that there obviously no one in, it's all done manually. So we knew that if we had something out there that could benefit automation, flat floor would be huge for us. Remediation in a project, depending on the size of the floor, could go into the hundreds of thousands of dollars. This means if the contractor doesn't put the floor in right, he's grinding the floor. The hump's off, and then if there's a dip, he's filling that dip. So that alone, we can make a very compelling ROI that, hey, look, I can just remove your remediation work by having a sky screed. Then, of course, there's so many things that come on top of that. The quality side, of course, the fewer men, and also the productivity side of things. So, for a flat floor, it seems kind of like, why do you need a flat floor? And it's not only just in structural, it's in everything. But today's age, everyone wants an extremely flat floor. I can tell you a real quick example. I was a contractor way back in the 80s. I bought the 4th laser screed in existence. And the reason why I bought it, because I got in trouble when I did a job and it didn't meet quality. We did a Walmart. Everyone, I'm sure, heard of Walmart. And we did it manually. And 28 guys pouring 10,000 square feet every other day. And we lost our butts. We had to grind the floor, and I almost was on the verge of losing the business until a superintendent come over and said, "Hey, you should buy a laser screed." And I said, "What in the world is that?" And he told me, he said, "I don't know, it's a laser screed, and if you want to do our floors, you got to get them flat, and that's the only way you're going to do it." Well, I wanted to grow the company. We were a small organization at the time, but I wanted to grow and expand, and I knew commercial work was the way to go. Started doing some research, called Paul Somero up late at night. I thought I was going to get the answering machine at the office. Called Paul up, and he said, "Yeah, why don't you fly down to the Carolinas, and I'll show you." And they were doing a chicken farm, and I walked on the job, and I seen one pass, and I said, "Oh my God, when can I buy one?" And that's how it started. But Walmart was really the ones that drove the quality piece of it. And the case in point is, when we put a floor in for Walmart, they laid what they call a piece of VCT tile. It's very thin and it's asphalt based. So they just put a glue down on the floor and they lay the tile down. Well, the amount of shopping carts and foot traffic that walks across this floor makes the difference, because the VCT tile starts to break down and crack and everything else. They didn't want that. So that's why we had to grind the floor, make it extremely flat. From that, it started to trickle down from there. Everyone wanted a flatter floor. And as time went on, the floors needed to get flatter and flatter and flatter. And as a contractor, if I'm bidding projects like Jack and I talked, if the specifications way up here, and if I know that I don't have a laser screed and my manual efforts will only get me down here, I know that I can't bid that job, or I shouldn't bid the job, because I know I'm not going to meet specifications. So that's what really drives the quality piece of why someone wants and needs quality, and why our customers are buying our equipment, so they can achieve that quality. There's no other way to achieve quality other than owning our equipment.
And I'm sure the answer is that it varies enormously, but what sort of lifespan do your machines have, and what is your reselling rate to the customers when it reaches the end of life?
Good question. So average 4 to 6 years, and it goes along the line of new technology, customers wanting new technology, because when we come out with newer technology, it makes the floor flatter. But we do have some customers out there with older machines, 8 to 10 years old. But typically you'll see guys trading in, trading up every 4 to 6 years. And a lot of it depends on their financing. Typically financing, like your car, is 4 to 5 years. So they'll trade in for the equipment. We do offer trade-ins. So if you have an old kit, I'll come in and say, "Look, here's what we value it. We'll take it in on trade for a new machine." We'll take that trade-in machine and take it down to the last nut and bolt, sandblast it, put new technology on it, and resell it back out into the market. And that part of the business is around 3-4% of the business overall. We'll do anywhere from 15 to 25 of those a year. And that's a great piece of it, because we have customers that want a big machine, but they can't afford $450,000. But they can afford $200,000 or $250,000. And again, that gets them into the family, because we know if we make him successful, we sell a remanufactured piece of equipment, he's going to come back and buy, a newer piece later on, because he's growing the business.
How do you get more of the contractors to know you? You mentioned that most of your sort of day-to-day contact is with the end user, is not with the distributors, is with the end user. How do you get more of them to get to know what you do?
Mm-hmm. Well, it comes down to the marketing, the trade shows, the direct sales presence, making sure that we do a lot of seminars and training and functions for the industry. Because granted, we sell equipment that turns the lights on, but we want to do so much more for the industry. We want to grow and teach the industry how to do that. And we do that all over the world. We're a concrete college in China. We have presence in India. We do the same thing, and the same thing in Europe. So I think having more people on the street, the marketing efforts, the trade organizations, the trade shows, getting our name out there more than just selling a piece of equipment.
And one thing we do is we have some targeted efforts using inside sales team capabilities where we track projects that are taking place, and then we have a list of those projects. So the inside sales team will then contact the general contractor or the subs if they know them, and just start qualifying a lead. Say, well, do you have equipment? Are you interested in equipment? And that's the way we create efficiency in the direct sales process. So we create a sort of a funnel of qualified leads that get fed to the guys in the field who can do the face-to-face follow-ups.
So we do that in the U.S., of course, and in Europe, and also in China.
Jack, Howard, John, thank you very much.
Thank you all very much. Really appreciate it.